It's 6 o'clock in London, it's 1 p.m. in New York, 1 a.m. in Hong Kong, 3 a.m. in Sydney, 10 a.m. in San Francisco, and 10:30 at night in Mumbai. Greetings, good morning, good afternoon, and good evening, depending on where you are in the world. My name is Patrick L. Young, the IPO-VID live stream, Series 9, Episode 4. Cumulatively, we are on the epic number of 52. That's the sort of number that an England batsman dreams of these days. And it starts here. Let's talk about financial Cold War, first of all, ladies and gentlemen. We're not being paid for this promotion, just in case anybody thinks that we're doing something commercial around here right now. Rather, that's a wonderful new tome. The online world is wonderful, you know, ladies and gentlemen, but there is truly a great feeling. I mean, there's something really delightful about cradling a good book in your hands. And in this case, it's an absolutely gripping must-read. I thoroughly recommend it. It's written by my good friend James Falk. You may recall James Falk from the parish of exchanges. He used to be one of the leading figures in the Hong Kong exchanges, spent a spell at a London metals exchange just in the course of COVID happening. In fact, it's a thoroughly thought-provoking 500-page tome. I know because I read the proofs and I'm actually rereading the proper book now. Financial Cold War is a great primer for those of you who are interested in the dynamic relationship of the 21st century's prime superpowers, namely China and the United States of America. It's published by Wiley's, and I'm actually looking forward to welcoming James on IPO-VID soon, when we're, for one thing, both in a more mutually convenient time zone, as opposed to waking him up at 2 o'clock in the morning to talk live right now. Financial Cold War is available in bookshops right now. That's just one of the many stories we covered this week. All this and many, many more things have been covered in greater detail in Exchange Invest, the daily newsletter of the Bourse Business. Send us an email or hit me up on whatever way you're watching this live stream this evening, presumably Facebook, LinkedIn, or Twitter. Patrick L. Young, you'll find me easily, and we'll get you signed up to have a free trial and understand the exchange business. Our guest today, ladies and gentlemen, is Fredrik Ekstrom, and we're going to be joined by another fabulous co-host this evening, Steve Spick, who's been guiding me through the world of carbon for the course of the last couple of weeks. Today's topic, Puro.earth, Nasdaq transforming emissions. Fredrik Ekstrom is president of Nasdaq Stockholm and head of European fixed income and ESG for Nasdaq. He joined the OM group in 1999 and has held various leading roles, such as rising to president of Nasdaq Clearing and head of the Nasdaq Nordic fixed income exchange. Fredrik, interestingly enough, now here's a little linkage for you. He holds a degree in economics from Uppsala University. My wife was born in Turun. How do these possibly conjoin? Well, of course, they conjoin around the wars of the Reformation, because Nicholas Copernicus, the great Renaissance genius who I often mention, was, of course, born in the city of Turun, a fabulous United Nations heritage city to which I recommend you all go. Uppsala, also a beautiful heritage city to which I recommend you all go, has many things, including booty, ladies and gentlemen, because if you want to read the original copy of De Revolutionibus, the first edition copy that was given supposedly to Copernicus on his deathbed, you can now find it in Torrent. No, actually, you can find it in the University of Uppsala, because the Swedes won the counter-Reformation battle across Torrent in penalties, presumably at some point in time, even though ultimately the counter-Reformation saw Poland going Roman Catholic once again, even without the great copy of Copernicus' book. Anyway, that's the university, a wondrous historic university in Sweden, from which Fredrik Ekstrom holds a degree in economics, and he sits on the boards of the Helsinki and Icelandic Exchanges and is chairman of the board for Puro.earth, which brings us elegantly into today's conversation, leaving aside the fact that he's also a member of the board of trustees of SNS, Sweden's premier venue for fact-based public debate. And for those of you who are lumbered with, say, CNN and New York Times for your news, you might be quite interested in the concept of fact-based public debate in its entirety. Anyway, Puro.earth, Nasdaq transforming emissions, that's our topic. Send us a question in the chat if you'd like to talk to Fredrik or Steve or even myself, ladies and gentlemen. Fredrik, where in the world are you today? Welcome to IPO-VID livestream.
Thank you, Patrick. I'm located in Stockholm, Sweden today.
Excellent. So Stockholm, Sweden today, I would imagine that gives us some rather contrasting weather. Steve, where in the world are you today?
I'm in Nairobi, Kenya.
Nairobi, Kenya. So that's presumably not quite as snowy as Stockholm, I would gather. Right, no. Fredrik, tell us a little bit about your history. So you joined OMX Good grief, 20-something years ago. How did you get into the exchange business?
Well, that was not the intention at all, but I ended up in my first job after university, joining the OM Group in 1999. And since then, I was then part of OMX and then Nasdaq OMX and now Nasdaq. So it's been, as you say, a 20-year journey, very exciting, very educational, and it's also fantastic to see the combination of the two companies, OMX and Nasdaq, how that has flourished.
Yes, I mean, that's been quite a journey, hasn't it? So you were there at the point in time when Nasdaq swung into town and made this spectacular bid. When was that, 2006, 2007 for the OMX properties?
7-8.
7-8. My apologies. I was not quite sure exactly where we were there. Incredible times. And we've seen really, I mean, OMX itself was an amazing business, but there's been also a remarkable transformation during the decade and more that Nasdaq have been in charge.
Yes, and I think, I mean, OMX was a company that was very innovative, that was very technology based. I mean, establishing one of the first an option market in Europe here in Sweden in 1984, and Nasdaq, of course, the same. And an innovative company, technology based. And I think the combination of those two companies has been very fruitful in of course, there's different culture between US and the Nordics, but I think we have the same view of the world when it comes to market, how market can help and support economic growth, how actually market also can help now support the sustainable transition that the financial markets are in and that the society are in. And I mean, an exchange sits between the corporates and the investors. And today, with this transition that we are in, which probably is one of the strongest trends that we have in the financial market around ESG and sustainability, I think we have an important role to play to support that transition.
So you have an important role to play to support that transition. How do you see that actual support playing out?
I mean, the core of our ESG strategy is really to support our customers, and that is corporates and investors, in fulfilling their own ESG targets. And of course, it's all starts with capital allocation, capital raising through the exchange, coming to the market, and then there is a journey where we, as an exchange operator, want to support our customers in that journey on public markets. And so we have ESG advisor to support corporates. We have our corporate governance tools, our ESG reporting tools, One Report. We in the Nordics, we established the first sustainable bond market in the world in 2015-16. And of course, raising capital to support the transformation, and then also create solution that really helps both corporates and investor reaching their ESG targets. That's where I think we can play an important role. And in that, the majority investment in Puro.earth that we did in June last year, I would say complement our existing solutions for our customers very, very well, because with Puro now, we can provide our over 4,000 listed companies globally with a solution to manage their carbon footprint through measurement and trustworthy and high quality carbon removals. Because what Puro is a carbon removal marketplace.
So that brings us on instantly to a fascinating topic. Steve, take it away. Help us understand better what that means, carbon removals.
Well, yeah, that's, when we look at carbon markets, we look at two different types of markets. We look at emission reductions. I mean, this is, the whole shift towards carbon neutral and then to net zero is that companies should reduce internally first. And then in the most immediate time right now, we should be focusing on offsets that help other companies reduce. And then if you look at the IPCC and the Oxford principles, the next step down is going towards removals, which is pulling carbon dioxide from the atmosphere, either by planting trees or, doing biochar, doing, carbon capture and storage, where you're pulling it out of the ground, infusing it, or pulling it out of the air and infusing it into the ground. And I guess that actually brings up my first question, which is, because if I look at Puro, you guys have created your own standard, and you're also focusing only on removals. And I guess my two questions are, why only removals right now, and why a new standard? Why not use one of the existing standards?
So when Puro was established in 2018, the co-founders of Puro, Antti Viavainen and Marianne Tikkanen, they really saw some of the innovation that was happening in the industry around carbon removals. As you say, biochar, carbon capture storage techniques. They also saw the demand from corporates. We have the more traditional carbon offsets, this is to say the avoidance market, but there is a sentiment among corporates to focus more on removals. And the founders of Puro saw that and also saw the missing link. There were no really business model to connect in a trustworthy way the demand from the corporates with the project developers of carbon removals. And carbon removals are sort of net negative emissions. And Puro also was focused not only on removals, because even with removals, we can separate between nature-based removals and technology engineered-based removals. And Puro's focus was on the technology engineered-based removals. So they saw the innovation, they saw things happening. The lacking of business model was really why they established this marketplace, and also the standard organization, because at that point in time, the sort of more traditional standard organization really was not into engineered carbon removals, and Puro wanted to find the least disputable way to define the methodology for engineered carbon removals. And today, we have established also an external advisor board, which is chaired by Professor Miles Allen from Oxford University, to create a strong governance around the methodology process and the methodologies and the standards that Puro established around engineered carbon removals. Now, I think sort of your second part of the question is really sort of why focus on removals now, while what we should do is really to reduce as much emissions as we can. And that is true to some extent, but if we don't act now, we will be too late. I think Science-Based Target defines it quite well when they say that we need to reduce current emissions with around 80 to 90%. The rest we need to remove. But that sort of what that means is actually that we need to remove around 5 gigaton of emissions on an annual basis, minimum. And we need to do that within, I would say, maybe 10, 15-year period. And to achieve that, we need to start now. We need to start now to make sure that capital are allocated into the scale-up of these engineered technology carbon removal facilities. As you say, biochar, carbon capture techniques like BECCS, biomass carbon capture, or direct air carbon capture, all of these will require heavy investment, heavy funding. And what Puro really tried to do partly is to support that capital allocation between the demand to the supply side through the marketplace, but also now in the partnership with Nasdaq, we are supporting in further activities around funding of scaling up these carbon removals. So there is no single bullet to this. I think we need to reduce carbon and focus on that a lot, but we also need to start build scale and solution around carbon removal, because long-term carbon removal are the most important type of carbon offset. Avoidance will play out long-term.
Yeah. I guess if I can just follow up briefly, because I know there is corporate demand for removals. but it is a little bit out of sync with what the science is telling us we need. And it really didn't. It started kicking in around 2020, mostly because of Microsoft and technology companies moving into removals pretty aggressively and shifting away from reduction. So I guess if there's, I realize you're trying to fill a gap, and in the sector, but it's right now the need is for it's for dramatic reductions. I think you mentioned a figure of the removals we need within 10 years, but most of the the models that I've looked at are really emphasizing reductions right now, even with an idea of a little bit of overshoot, because once we if we everything that goes up now has to come down later, and it's always going to be more expensive to deal with that. And I guess my question is just whether there is going to be because you're affiliated with an exchange. I feel like you're sending a signal that could be misconstrued, that these, because that these products are really superior to what already exists. Whereas I think I'd argue that there are plenty of biochar standards out there that have been around for a long time that have published methodologies. The CCX, I think, is everybody's kind of going in the same direction. But I guess my question is, what do you see a segue in the future? Do you see this moving in? Like, is this just the beginning of a longer strategy? And will you be bringing in
let me help there, because I think, Steve, we're having huge problems, unfortunately, trying to reach you in Africa. You're really breaking up at the moment. So unfortunate. So you're obviously talking about this removal reduction debate, and you're trying to get to the point of, is it, if I understand correctly, is it essentially some degree of a sort of a fad? Is it going to be the long-term solution? Are we going to be permanently looking at removals, or is there going to be also the removal reduction debate going to recalibrate over time? Fredrik.
So there is a need to reduce current emissions. That is absolutely clear. But you can also see the academic report coming out now, the latest IPCC report. You can also see the sentiment in the market, corporates turning more and more into removal technologies to manage what they cannot reduce, because there will always be some emissions left. There are emissions that is out of your control. There are maybe not possible to reduce 100%. And then actually what science-based target says, and what more and more academic reports says, is that long term we should remove that part. And as I said, it's quite large figures we need to remove, like 5 gigaton, and to be able to reach that, because today these engineered or technology removals is clearly a supply constrained market. So I think the sort of the current traditional or sort of carbon offset market, they play a really important role now, but long term we need to move towards more use of removals, and then we can't start to work on that in 5 years or 7 years, because then we will be too late. So already now, this is a long-term strategy. I mean, what we are doing together, Nasdaq and Puro, is really how to support innovation in technology removals. We are looking into how we can provide funding to removal projects. There will be a mix of public funding, and we have the EU fund, we have other solutions, and private funding. And for example, together we established a product in Q4 last year called Pre-Cork, and the cork is the CO2 removal certificate that is issued on this market. And the Pre-Cork is really an offtake agreement to ensure that suppliers can sort of in more certainty go in and scale up their facilities where they have a committed buyer on the other side. And then we have solutions around funding, more sort of funding solution to help reallocate capital. And even if we do that now, it doesn't mean that all emissions out there will be sort of offset by using removals, because I mean, we have maybe a couple of 100,000 tons of engineered carbon removal available right now. And then on nature-based removal, maybe there is a couple of million tons. But I mean, if we're going to get to 5 gigaton, we need to act now. And I think the whole purpose here is around building a market that can create more transparency and trust, that can create a better and more efficient price formation that will help the demand side. It will also help the supply side. Then we can make sure that we allocate capital and generate funding to the supplier to scale up. And it will take some time, but it's a huge potential to work together with a player like Puro and really try to make an impact. And I think we don't have to exclude solutions, and especially not carbon removal, because my view long term is going to be the most important type of offset, but we need to start now.
Steve, you were going to say something about CCX and Biocipher or something. Go ahead.
Yeah, can you guys hear me now, or am I still
Perfect.
in the
Go
same?
for it. Yeah,
okay, okay, comes and goes. Yeah, I think it's just I think we kind of agree. This is the consensus is that long term we have to go to removals, and Science-Based Targets Initiative is focused on the year 2050 when all emissions have been reduced that can be reduced, and then only approved removals are being used. And I guess my other question, I think you answered it, but I couldn't hear too well, was on the standards that you're using, because you guys have one standard, and I couldn't find the methodologies in there. So I'm just wondering if you're going to have, because I mean there are other methodologies for maybe not CCX, but there are methodologies for biochar and for geosequestration for wood products, and I'm just wondering if you're going to be allowing people, is it a service you're providing to your customers, or is it envisioned as like an exchange where you can have multiple products on there? I guess that's the thing that I'm confused on just a little bit, because it's more like you're selling I can't tell if you're selling a product that's a standard or if you're creating an exchange where other people can put their products on there that have been verified under different standards.
So today, Puro has 5 methodologies, standards around biochar, wooden building elements, concrete building elements, and then you have BECS and DAX, and there are others that are being investigated by this external advisory board, for example, biomass encapsulation and also enhanced weathering. So there are different sort of engineered type of removal methodology. So Puro has defined the methodology themselves around this, and it's then vetted and approved by these external advisory board, which sort of hold the governance around the standards. Now, when a supplier then comes to Puro and want to issue its net negative emissions, sort of the CORC, the CO2 removal certificate on the marketplace, and this is not an exchange, this is a B2B marketplace. So we list them. So the supplier comes to Puro. It has to, the facility or the product, let's call it the biochar, it has to meet the standard of Puro around the biochar standard, the biochar methodology. Then it has to be vetted. It has to sign the marketplace agreement and fulfill those requirements. And then there is a third party independent auditor coming in and actually verifying the output of these removal contracts. And here's an important difference between nature-based, because nature-based are ex ante, where you need to modeling sort of how big the removal is going to be from the nature-based. Why actually the removals, the engineered removals on Puro are exposed. So here it's actually measured and then audited, and then after being sort of removed from the atmosphere, it is issued on this B2B marketplace. So that's how it works. Now, long term, if this will move into an exchange and there could be other standards listed on this, absolutely possible. I think to succeed long term, fulfill sort of what we really try to do here is to reach the Paris Agreement and to meet the demand from the corporates and actually make sure that the society doesn't get impacted by the environmental sort of climate change. I think we need partnerships. So we're going to see partnerships with other standards. We're going to see more partnership with other exchanges, marketplace, to really try to make sure that we together make as much impact as we can. But I mean, Puro today is really the first mover and the leading marketplace within these technology engineered carbon removals. Now, as we scale this up and move along, we will see more products. I think we will see more sort of partnership with other standard organizations, but also with other marketplaces.
Very interesting altogether. Let me give you a chance to actually grasp your breath there, Fredrik, as that fascinating introduction and series of remarks. We're already 25 minutes into the show, ladies and gentlemen. Thank you so much to everybody we've got a couple of questions coming up in a moment, and all those who've already been making comments. Lovely to see you, Peter Sekon, Simon Huckle, good evening. Also great to see Sachin Patel and Les Calvert. Greetings and welcomes to the show. And in fact, let's start with a question from Peter Sekon. Actually, that was not the question I wanted. I wanted the second question, please. Thank you. Peter Sekon asking, what are the externalities of carbon trading?
Can you define that a little bit more in detail?
Tell you what, Peter, why don't you define what you mean by the externalities of carbon trading, and we'll go to your other questions. So let's have this. So on a more broader topic, you mentioned technology, Fredrik. Most of the world's technology giants are listed on the Nasdaq. What growth or new opportunities are you looking at for 2022 and beyond to never stop improving and keep a competitive market edge? I think you've got a fan there in Nasdaq, Fredrik. Thank you, Peter, for your question.
Thank you. Well, I think most of you have seen at least the announcement we made around the partnership with AWS on sort of moving our markets into cloud. So that is, of course, a very important step within 2022 and onwards. But that's on sort of the markets and the corporate level. I think if I zoom into sort of the carbon markets and Puro specifically, it's really these tech companies, I would say, are the pioneers within carbon removals. They are the ones that have sort of the first generation of customer that really has vetted these engineered standards. They are the ones, I would say, driving the demand for carbon removals. I mean, these tech companies are, of course, a little bit lower in emissions. They are high margin and have sort of the opportunity to focus on this. I think the interesting now is what we see in the market is really the next generation of customer coming in now. Maybe a little bit more larger emitter, but that also needs to start to focus on removal in small scale now, but they need to build up their book long term to be able to manage what they cannot reduce through carbon removals. So I think it has been a fantastic partnership that we have had with our customers, especially the tech sector, to really drive sort of also carbon removals and a fantastic speaking partner for us when we develop Puro into the next step of scaling up. But from a corporate perspective, of course, I think the announcement around our cloud strategy last year is a very big thing. And then, of course, anti-financial crime and the acquisition of Verafin and our focus there is going to be very, very important strategic sort of pillars for us.
Fascinating altogether. Really, really interesting. Now, unfortunately, we're having a few problems with our Nairobi link this evening. I'm afraid Steve can barely hear us, I do believe. Well, a bit of a shame altogether, because that was very interesting. You're talking about the building up of Verifin, you're talking about the other business into the cloud, and obviously a huge amount in relation to the Puro.earth strategy. But presumably, Fredrik, I mean, Puro.earth is one element of your total ESG strategy. What other things are you working on at the moment that you can tell us about?
As I said a little bit in the beginning, the core of our ESG strategy is around how we can support our customers, so corporates and investors. So of course, in building a portfolio now of ESG solutions, it is targeting really the demand from our customers and how to find solutions that really will help them achieve their targets. We should not also underestimate that sort of regulators now are becoming more active around ESG. There will become reporting requirements for corporates, transparency requirement for corporates around ESG. I'm sure within the carbon markets, we're going to see more regulation. EU are looking at this and creating more sort of rules around standards and so forth. And all of that, of course, create, I would say, some challenges for sort of all of these customers and really how we can help those customers. So as I said, what we have is this ESG advisory that really supports corporates in their initial journey. We have ESG reporting called One Report, which is a trade workflow tool to support corporates in their reporting of the different ESG reporting standards. Our sustainable bond markets, record year last year, where we had over 130 sustainable bonds listed here in the Nordics, over 40 billion euro in market cap now. And in the Nordics, actually, of all corporate bonds issued, about 30% of all corporate bonds today are sustainable. And that is a really good development if we think that these capital that are raised through our sustainable bond market, they are earmarked for sustainable transition. We also last year launched this green equity designation for our listed company here in the Nordics. They can get a stamp that is verified through a third party that they are green. And I think long term, it's really about making solutions that help customers, but also and in that will help them long term also with capital raising. I think from a carbon perspective, we have started. We have a lot of things on our agenda, as I said, and also what was said in the previous podcast around carbon with Bill Pazos and Graham Bennett, which I think was really, really good, was that within the removal space, there is a really strong need to scale up supply and funding is important. So how can we support that with sort of more products, creating a benchmark price around carbon removals, creating future type of products. We have, as I said, the pre-cork today, which is like an offtake agreement to support scale up of the supply side. We have PPAs, but maybe more traditional futures also can be relevant. And then also how we can maybe grow through partnership within that space. So we will continue to really evolve around ESG and make sure that we have those solutions in place that really help customers reach their own targets.
Fabulous. Okay, we're going to come back to Peter Seconds clarify this question in a moment. Good evening, Chris Cook. It's lovely to see you all together. Thank you for joining us. I know you've got a few interesting ventures in this space at the moment, Chris. Great to hear from you all together. Glad you're able to watch us on LinkedIn. We're also live on Facebook and at this moment in time also on whatever that other one was. Oh, yes. What was that other social media, pal? YouTube. That would be it, ladies and gentlemen. We're coming to you live across the ether sphere. Just one thing I want to check with you there, actually, Fredrik. You mentioned, I think I got the numbers right, 130 environmental bonds, 40 billion euros being raised. And I do believe you said, was that 40% of your bonds coming to market at the moment are effectively ESG?
30%.
How many?
30%.
30%. fantastic. That's a spectacular number altogether. Steve, back over to you.
Yes, and can you guys hear me right now?
Yep.
Perfect.
Okay, good. And forgive me if you touched on this. I'm wondering if you could talk a little bit about the advantage of having a carbon price and equities on the same exchange. Are there spreading opportunities or other ways of incorporating carbon price into an equity price? Is this something you're looking at down the road?
No, I see very limited opportunities here. I think that's not how it is today. I mean, Puro is a B2B marketplace, and it's not part of sort of the Nasdaq Nordic Exchange. What I think will happen is that we need to learn from building markets and how to apply that into the carbon removal space, because it's maybe not ready for the same type of trading as we see within the equity market. But we need to copy some of the characteristics to build markets. We need to create more transparency. We need to create more price benchmark, price points to help both investor and the supply side. I think we need to build products. Next or this year, we will also implement Nasdaq technology on Puro to help them create a more efficient matching techniques to support between the corporate demand and the suppliers. So I do think we can learn a lot from how we have built markets within the equity space or the fixed income space. I don't see sort of the carbon removal market being on the same platform, but because they all have, I mean, the carbon removal markets have special needs when it comes to how to create matching. And one of the problems we have, as you talked about in the last podcast, is of course it's not commoditized yet. It's really you issue every project on the marketplace, and then the buyer buys into that instead of a heterogeneous commodity. So I think there are a lot of things we can do to support the development of the market, which I hope will help support the scale up of this market, which is necessary, but not on the same exchange.
So we're certainly not looking at a single exchange, but we've got a multiplicity of possible offerings coming out of Nasdaq. That's really, really interesting. Let's go back, Steve, in a second. I'm going to bring you back to the conversation in a moment. I'd like to go back to the Peter second question, and then we're going to get back to, I know, the topic that is itching in Steve's mind. Hopefully we'll round this out neatly. So earlier we had a question which was asking about the externalities of carbon pricing. Peter second goes on to add, so firms that emit carbon place a burden on the environment, which is borne by everyone in the form of a changing climate. They incur a cost for doing so, taxes, etc. How is that absorbed? How does that cost? Where does that cost sit? That's really what he's talking about in terms of externalities. Fredrik, Steve might even opine in a moment.
I think it's been quite obvious that sort of the carbon market and the pricing of the carbon market has not really reflected the true cost. But the last 2-3 years, we have seen how the price of carbon in the emission market has increased dramatically. Now probably much more sort of representing the true cost of carbon. Within the voluntary carbon markets, we see the huge price differentiation between the different products. So an avoidance can be around maybe $2 to $3, $5 per ton, while removals, engineered removals on Puro can be between sort of $100 to $150 per ton. And I think it's sort of what the market does is that it creates a price that should encapsulate this, the quality, the impact, of course, the scarcity in supply, that we have a supply constrained market. But then I'm as I said, we also see regulators now becoming more active around carbon. I think we're going to see there is some regulatory pressure around sort of that the corporates should publish a sort of a carbon price, an internal carbon price for their business. There is activity that I think will sort of drive these discussions, but the market is really trying to capture by making prices more transparent.
Mm.
Interesting.
Yeah, I've got a quick question on this. It's been the theme of all of these, which is this quest for a core carbon price. How achievable is that? Do you think we are ever going to have a core carbon price, or are we always going to have different prices for different types of reductions and removals?
I think we're going to have different prices for different carbon products because they are so different. And there will be, we need, I would say, reference prices. We need benchmarks within the certain element of the carbon offset market, all the way from reduction, REX, avoidance, nature-based, technology-based, and then you have the compliance market, of course, also. Then, of course, I think what will happen is that compliance market and the voluntary carbon market will get closer to each other, maybe even connected in a better way. Again, regulators are looking at sort of how to maybe broaden the compliance market, allowing more carbon credits from the voluntary market to be eligible within the compliance market. And then, of course, prices will sort of convert a little bit. So, but there will, I don't think we will have one single carbon price. They were going to be different because the assets are so different in itself.
Yeah. And maybe a quick follow-up if we have time. How about can I? Okay. How about the idea of a reference price that everything else can trade at a premium or discount to? Or do you think that's also, because I don't see how that can happen, but I know that's the holy grail to a lot of people. Do you think we can ever have one core reference price that everything can go above or be a premium or discount to?
No, I doubt that. I don't think that's, and I'm not sure it's needed. I think we need, of course, to sort of develop more market mechanism, as I talked about before. I think we need to create more rules and around standards and the different products, and it will become more commoditized. I mean, within the avoidance market, that is really like a product that is really tradable. You sort of trade with intermediary back and forth. The removal market are still sort of a fundamental market. It's sort of business to business. There is almost no intermediary in there. I think we were going to see intermediary coming into this market, and then maybe require more sort of general benchmark and sort of prices. But I don't see that happening.
One more question that's related to this, and it kind of goes back to what I was picking at earlier, which is this next generation stuff. What kind of a role do you see for exchanges or B2B platforms in promoting next generation technologies? Because there is this move. There are a lot of companies now are going in and they're financing, new technologies where they don't feel confident enough to make any kind of a carbon claim, but they're willing to say we are making a contribution here, and we are financing the next generation of carbon offsets. There's a few Dutch companies that are doing that, and none of these are coming on exchanges. It's all companies financing projects directly, just as it was 20, 30 years ago. Do you think that this is something that exchanges and B2B platforms can help facilitate?
Yes, I think we're going to see a combination of marketplaces, even if it is a B2B marketplace or exchange, supporting that allocation of capital. We're going to see direct investment, VC capital coming in. We're going to see corporates buying directly into the facilities, the project. And we're going to, really, I think carbon offsets and carbon removals, especially carbon removals, is really going to be long-term the big next commodity. So I think we're going to see investment in there. It doesn't necessarily always have to be through the marketplace. It can be sort of other type of solutions.
Okay.
Steve, you done? You in good form, Steve? Would you like to ask another?
Let's see. I think he answered it. I think that's just an interesting dynamic that we've got going on here with these removals where companies can make a claim they feel confident enough. Then there's different standards that have different degrees of confidence in this whole next generation area, which might be where the voluntary market is today. I think you answered my question, though.
Cool. Well, look, I mean, let me also say, first of all, we've got a comment from Chris Cook, and Chris Cook is noticing the fact that a global price in dollars is not possible, in his opinion. A global carbon energy standard is another matter. Now, that brings us to an interesting comment he makes. I suspect you'd be interested in the Island Power Initiative we've worked up. We envisage a smart market paradigm of energy services and carbon markets priced in energy. So there you go, a second plug of the day, and we have not been paid for either of them, ladies and gentlemen, in case anybody on YouTube thinks we're commercializing the station beyond belief. Very interesting, Chris. Hit me up, DM me or something. I'd be delighted to talk to you about that. That sounds really interesting. So Peter Sekon wants to change gears slightly. Well, good grief, we've reached 45 minutes and we've barely talked about crypto, anything, or blockchain. Gosh, that's quite incredible. Once again, ladies and gentlemen, how we can get so far into the show without doing so. So Fredrik, with technological capabilities changing and a bigger focus on NFTs, blockchain technology, carbon credits, et al., do you believe changes are needed to how bonds, securities, equities, futures, financial instruments are classified or priced and traded in the future?
I think we all discussed blockchain and sort of digital assets and all of that, how to integrate that into the traditional capital markets a couple of years ago. It's proven to be quite difficult because of all the legacy system and the plumbing in the post trade and everything. The interesting part with environmental markets, and especially then around carbon markets, of course, that there is no legacy infrastructure. There is an opportunity here to really think from a white paper around the technical setup, which open up, I think, opportunity to use more blockchain, to think about actually building a digital exchange around ESG. I mean, all environmental markets are in the cloud from the start, and so it's an opportunity here to be not only innovative in the way we support development of the removals and the credits, but also the technology and how it is operated. So that is something we from sort of Nasdaq really look into and see how we can support Puro with sort of really next generation of technology to support their growth. Then when it comes to how things are traded, I mean, what I do think is that maybe around bond market, that sort of digital issuance will grow. We start to see companies establishing that. It's a little bit pilots being tested around that. I think that is an area where we're going to see a change, maybe long term, that we're going to see more digital issuance in the origination of bonds compared to how it works today. But maybe more long term. But within the environmental market, I think we're going to see more utilization of blockchain, digital technologies than in maybe the traditional markets, because it's easier.
Very interesting. Simplicity being the key and greater efficiency, obviously. Steve, we got another follow-up. Peter Sekon asking lots of questions this evening. Thank you very much, Peter. Steve, take it away.
Actually, the question that I had popping in my mind is a little bit kind of going off the off the path here, which is just there's a, because when we're talking about removals and industrial removals, we talk about nature-based solutions. There's a whole school of thought that's emerging now, centered in Oxford, by the way, where they're saying that in going forward, any kind of industrial emissions, like if you're a fossil fuel company, the only offsets you should be allowed to recognize are offsets that go into industrial carbon capture and storage, because that's you took something out of the ground, now you're capturing, putting it into the ground instead of nature-based solutions. Whereas if you're an agricultural company, maybe you should be allowed to offset with nature-based solutions. I'm not endorsing that view, but it's gaining momentum in certain circles. And I'm wondering if this has it all factored into your thinking as to why you went in this direction?
I hope you heard that, Fredrik. Let me just repeat it in case anybody didn't catch that at home. So essentially, there's a school of thought which is coming out of Oxford in between toppling statues and other progressive activities. They're concerned about the idea in relation to the concept of, well, if you dug it out of the ground in the first place, you should essentially put it back in the ground, and therefore agriculture should effectively match with some sort of an agricultural offset. Industrial offsets should match up with an industrial offset once again, something along those lines. And essentially you're seeing the same structures, the same industries, the same sectors should be matching each other. What do you think about that as a school of thought? And do you think that's a way that carbon markets are likely to go?
First of all, I'm really happy that we have been able to establish this very strong advisory board to support Puro in these type of discussions. So as I said, we have an advisory board chaired by Professor Miles Allen from University of Oxford, and we have other academic, industry expert, NGO expert within that advisory board. It's also clear that academics are putting much more effort and time into looking at sort of how to really do the journey from today to where we need to be in 20, 30, 40, 50. And that is all the way, as we started the dialogue with the question around reduction versus removals, avoidance versus removals, and type of removals, how to match your emissions with a specific type of carbon offsets or removals. I am clearly no expert on this, and we will follow sort of the academic guideline and make sure that we have the different products that is needed. But clearly, what is very important for us is that Puro is a carbon removal marketplace only. That is where we really want to make an impact. That is where we want to be and scale up to support the demand of carbon removals. Then there will be other carbon offsets that will play their role in this market, but Puro has its own focus. Then, of course, it can expand into, nature-based carbon removals. Today it is engineered carbon removals only. I think we're going to see this idea around composite product, which is sort of mixing maybe nature-based with technology-based removals. I think that's a very interesting concept also coming out of Oxford. So there will happen a lot. There will be innovation in the removal technology itself, and there will be a lot of things happening in this industry. I think it has happened a lot the last 12 months, and it will happen equal amount of things in coming 12 to 24 months.
Fascinating times ahead then for the whole market. Unfortunately, we're having a bit of difficulty with Steve's microphone at the moment, which is such a shame because he's been adding so much to the conversation. We got an additional question from Peter Second. So do you see a further push on regulation coming forward in either the carbon markets or more generally in financial markets as a whole, Fredrik? Well,
within the equity markets and the more traditional financial markets, it's hard to see that there are room for more regulation. But within, I would say, the ESG space, absolutely. I think we're going to see more regulation, more global standards. I think we need to, within the carbon market specifically, get to a more sort of general view of sort of a global carbon standards for the different methodologies around avoidance, removal, nature-based, engineered type of removals. And then regulators are going to do a lot more around ESG in general, I think. And that's going to be a challenge. And here is clearly an area where we want to see how we can support our customers.
Okay, so let me take that back a step, though, because it strikes me right at the moment, there is an incredible amount of movement going on in terms of the number of disclosures being pressed upon companies. And I've got to say, as an entrepreneur, while I absolutely believe that everybody wants to do the right ESG thing, there is surely a huge concern that companies are already going to be swamped, particularly at the SME end, by the sort of legislation that's coming through from the EU and other bodies.
Yes, I think that, on one hand, I think we need more transparency around ESG, and if we are going to transform the market, and if we need to understand what's going on within the companies, and investors, if they are going to tell their end clients if they invest in something that is green or not, they need to understand what they invest in. So transparency is needed. The problem is that we have multiple reporting standards. There is a risk that there could be, of course, multiple regulation across the different jurisdictions. And then you have the raters and rankers who also want their information. I think it's overwhelming for corporates with all of this data that are required. So I think it's very critical that we sort of come down to what are the most important data points needed from corporates to be transparent on, and focus on that, and hopefully get to a global standard, because otherwise fully agree with you, it can be very, very overwhelming.
Yeah, I think it's a concern for all of us. So I think we've got a couple more comments and questions that may have come in at the moment. I am running blind. I have one screen down. Please help. Robert Brown from clearingandsettlement.com. Great to hear from you. And yes, peer-to-peer, price, classified, global, always on. Interesting remark there, Robert. Great to hear from you. Are classified. Okay. Wonderful. Thank you so much for your comments this evening. And therefore, Steve, would you like to ask your question? And if you're breaking up, I will ask it for you.
Okay. Yeah. I'm wondering if if you're seeing a lot of demand for international offsetting, or if companies in the industrial space are buying locally, which has always been kind of the issue in nature-based solutions, is the companies like to buy. What's happening in the industrial removal sector?
Not to the same extent. It happens sometimes that there is a clear demand for a certain project in a certain region to match your emission from that region. But Puro.earth has 45 suppliers of engineered carbon removals today. They are globally, they are worldwide, US, South America, Australia, Europe, Nordics. And a funnel of over 190 suppliers. So no, it's not specifically so, but sometimes we can see that demand.
Interesting. Well, look, ladies and gentlemen, we've had an incredible 1 hour of discussion so far. It's come to that point where I think we're going to ask you just that one future-looking question. It's not related to the book that I brought with me this evening, which is talking about the financial Cold War order, but rather Capital Market Revolution, that book that was published so long ago. Paper was actually the only way that you got your books of a morning. Fredrik, how do you see the capital market revolution developing as we move forward?
The real revolution here is that we need to take engineered carbon removals, or carbon removals in general, from a couple of 100,000 of tons to 5-7 gigaton of removed carbon from the atmosphere. And that is a huge purpose on all of us to make sure that this happens. And that is the revolution.
Wow, what a pithy one-liner to end us with. We've got 200 to 300,000 gigatons we're removing, 200 to 300,000 tons we're removing. We've got to get to 5 gigatons as fast as possible. Gosh, that is quite an incredible message to bring to us this evening. So it remains for me to say thank you to everybody. We're going to be back next week. We've got a wonderful show. 2 diverse musketeers are going to kick off February for us. We've got Julia Street, who in some ways needs no introduction to many people out there, I'm sure. And absolutely awesome figure around the financial, technological, and diversity sphere. And we're also going to be joined by Eliza Philby, and that should make for an absolutely fascinating show. Steve Zwick gets to have a rest for at least a week at this juncture, but we're going to be back talking about more green topics in the future. However, in the meantime, thank you very much, Steve, for being with us this evening. Sorry, we had a few technical hiccups between Nairobi and the rest of Western Europe, where we were coming from this evening. In Stockholm, it was wonderful to see you, Fredrik Ekstrom. Fabulous altogether. Really always a delight. We look forward to seeing you again in the near future and talking more, I think, about the developments of Puro when you've really had an opportunity to crank that business up, because a lot of people don't realize how fresh the deal was. I mean, you only did the deal basically last year, if I remember correctly. It only remains for me, Patrick L. Young, to say thank you very much to everybody who contributed to the show this evening. I wish to thank Robert Brown, Peter Second, Simon Huckle, Sachin Patel. I know you had to go, but at least you'll be able to catch this when you're watching the video afterwards. Sachin, thanks for being with us for part of the show. Chris Cook, I really appreciated your interventions today. Great to hear from you once again. Les Calvert, lovely to see you here. Thank you very much to our production team, to Racy, Armenia, Beata, and having a baptism of fire, but you've done a brilliant job, Mary. Really, really appreciate it all together. So, ladies and gentlemen, the call to action, 200 to 300,000 tons are being removed at the moment. We need to get to 5 gigatons. The way to do that, through Nasdaq, Puro.earth, and indeed a sustainable emissions strategy. My name is Patrick L. Young, wishing you and all the Valerium shareholders out there a wonderful evening. I'll be back in Exchange Invest tomorrow. Thank you, Steve. Thank you, Fredrik. My name is Patrick L. Young. Have a great week in life and markets. Good night.